The Tax Cuts and Jobs Act created some really powerful ways for business owners to lower their income, particularly through the QBI deduction, otherwise known as the Qualified Business Income Deduction. The catch is that if your income is over a certain threshold and you have a specific type of business, particularly a service business, you're going to have a very hard time qualifying for this QBI deduction. Hi there, my name is Micciche, CEO of True North Retirement Advisors, where we specialize in retirement and exit planning for business owners. I want to share with you a really powerful strategy that will help you qualify for the QBI deduction if you struggled to or you didn't qualify for that last year, and that is the cash balance plan. And by the way, this is part 3 in a 4-part series on cash balance plan. So if you're like, I have no idea what you're talking about, what is the cash balance plan? I'll link to 2 of the previous videos that I did prior to this as a primer, all about cash balance plan basics, what they are, and what it's all about. But today I really want to focus on one of the most powerful benefits of the cash balance plan, and it's become even more compelling since the Tax Cuts and Jobs Act went into place, and that is helping high-income service business owners qualify for the QBI deduction. Okay, so what is the QBI deduction and how does it work? So let's say that you have a consulting practice and it's just you and you're very successful in this consulting practice and you make $600,000. For most businesses, you would get to just lob off 20% of that, take a deduction on that amount. So it's a way to sort of simplify before you get into any of the other things that you're going to itemize on your tax return. You just get to kind of take that haircut right off the top. In this case, because it's a consulting business, most likely it's not going to qualify for the QBI deduction. So these are the types of businesses that are going to have a difficult time getting that QBI deduction based on their income because they're service businesses. So healthcare business, so think medical groups, medical practice, law firms, accounting firms, people like me, financial services, performing arts, actuarial science, consulting, athletic, brokerage services, but basically most businesses where the reputation or skill of one or more of the employees is the reason for the revenues. So basically, if you make anything more than $321,000 and you're a service business and you're married, you're filing your taxes jointly, you're gonna have a really hard time qualifying and getting that full QBI deduction. And your tax rate, your taxable income, the amount you pay in taxes to Uncle Sam could potentially be much, much higher if you don't do some tax planning. And one of those very important pieces of tax planning that also has tremendous benefits for your retirement is implementing a cash balance plan. This is for you business owners out there, particularly if you have a service business that is struggling to get your income low enough to qualify for the QBI. That you are a fantastic candidate for a cash balance plan, because here's how it works. A cash balance plan is a retirement plan that you use to stack on top of existing plans. So you have a 401k in place, you probably have a profit sharing plan in place. Once you've maximized those contributions, then we want to layer on a cash balance plan. Let's say that you are a consultant, you are 58 years old, you're married, and your household income is $450,000. Okay, so you make too much money to get that QBI deduction. So here's how you can do this with a cash balance plan. So you combine the 401k profit sharing contributions. Through that together, you can get up to $62,000 out of your income for the year and into your retirement accounts. When you add the cash balance plan on top of that, you get another $236,000 out of your income for the year and into your retirement account. Takes your income from $450,000 down almost $300,000 less. So you more than qualify now for the QBI deduction based on your income, because your income is nowhere near that $321,000 threshold where it needs to be below in order to get that QBI deduction. So not only did you reduce your adjusted gross income, potentially reduce huge taxes that you pay, but the side benefit is that you save $298,000 that year alone inside of tax-deferred retirement accounts. It's a beautiful thing. Here's what I'm hoping you're asking yourself right now. Is a cash balance plan right for me? It's not an easy question to answer, because even though this is a powerful retirement saving and potentially tax reducing vehicle for retirement that can help you now qualify for this little nuanced thing about with the new Tax Cuts and Jobs Act, it's not as easy as making a decision about whether or not you should implement a cash balance plan in your own business. It's not this black and white answer. There's a number of factors to consider when you're thinking about a cash balance plan. But here's the thing. Below this video is a link to schedule a call with me for 15 minutes. You want to check a few boxes before you kind of go down the path of the cash balance plan, because you don't want to have this plan in place if it's not a good fit for you or your business. So if you click on the link below to schedule a call with me, I can tell you after about 3 questions whether or not this is something you should continue to look at seriously or if you should just brush it aside. And the other bonus too is next week, all I'm going to be doing is talking about the pros and the cons of the cash balance plan in order to help you better understand, is this plan right for you? Is it something you should consider move forward with, or is it not? So that's the topic of next week's video. If you have questions, schedule a call with me. Be sure to like, comment, and subscribe to this channel so that next week when we talk about the pros and the cons of the cash balance plan, you'll get a notice, you'll come on back, and you can see whether or not this plan is right for you. Thank you so much for watching. My name is Micciche, and I will see you next week.